to tell me, when do you think the banana zone starts? I kind of think we actually started. So I would say it really starts becoming obvious in the next couple of weeks. So this is when the banana zone happens. This is when we're usually in the election cycle as well when this happens. And yes, it doesn't mean the market's going a straight line, but you tend to do pretty well. If I look at, the NASDAQ this year, it's up 13%, it's corrected somewhat, was up about 18%. And, by the end of the year, it's probably up 30-odd%. That's kind of a very typical signature of summer. Crypto goes wild later in summer. Your bag is probably Solana. Well, it's breaking out, it's retesting that breakout. That's what it's been doing last couple of days. Looks beautiful. We want to see this kind of stuff because retests of breakouts, bit of sideways consolidation brings you the power of the banana, which is all we care about. Solana-Bitcoin crossed 2. When you look at the big chart, okay, that's a fucking killer inverse head and shoulders, cup and handle, whatever it is. It's suggesting there is a very big move to come in this cross, meaning Solana is going to outperform a lot. That is a typical signature of crypto summer, which is altcoin season.
Pal points out that the Solana-Bitcoin cross is displaying a bullish inverse head and shoulders pattern, indicating a strong likelihood of Solana outperforming Bitcoin. This pattern is a hallmark of the altcoin season, which typically characterizes the crypto summer phase. Pal introduces the concept of the banana zone, which follows the boring zone in the crypto market cycle. The banana zone represents a period of rapid growth and excitement, often marked by significant price increases and heightened market activity. He humorously acknowledges the internet memes around the banana, but emphasizes its importance in understanding market dynamics. According to Pal, we may already be entering this phase, with the next few weeks expected to provide clearer indications. Raoul Pal delves into secular cycles, explaining how they influence long-term market trends. He draws parallels between the secular cycles of the NASDAQ and Bitcoin, highlighting their consistent growth patterns driven by technological adoption. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Your bag is probably Solana. Well, it's breaking out, it's retesting that breakout. That's what it's been doing last couple of days. Looks beautiful. We want to see this kind of stuff because retests of breakouts, bit of sideways consolidation brings you the power of the banana, which is all we care about. The Solana-Bitcoin cross, look at that, beautiful. Why own Bitcoin when you can own Solana? Solana-Bitcoin cross 2, when you look at the big chart, okay, that's a fucking killer inverse head and shoulders, cup and handle, whatever it is. It's suggesting there is a very big move to come in this cross, meaning Solana is going to outperform a lot. That is a typical signature of crypto summer, which is altcoin season. And just to remind you, the game we're playing, here's the chart that looks like a banana. We understand bananas are phallic and they make us laugh, and we like to talk them out the internet. The memes are fucking brilliant, so please keep sending the banana zone memes. What you have is the boring zone, and then you have the banana zone. And I would like you guys in the comments section to tell me, when do you think the banana zone starts? I kind of think we actually started. So I would say it really starts becoming obvious in the next couple of weeks. I could be wrong. Again, it doesn't make any difference. I'm not trading around this, not doing anything. I'm just watching from the stands and waiting because I'm fully loaded. I've been in the position for a long time. So secular cycle. We talk about secular cycles, how they work, where we are. And then we've got the secular cycles of the NASDAQ. I just put a log regression and you can see how this works. It's a beautiful channel and it gets to the top, it gets overbought, then sells off. But basically, it's a technological adoption trend. Bitcoin, exactly the same, wilder swings, actually a steeper gradient. So again, secular trend. The other key secular trend that I follow is India. India is a very great log trend. Doesn't get us overbought. We haven't had kind of the bubble cycle. So we haven't had the 2 standard deviations, which would be the green line. But my God, it's a beautiful market. So those are the identifiable secular trending markets. Then let's see where we are in the macro season. So the seasons I talked about, same as the crypto seasons, spring, summer, winter, fall. So it's kind of spring is disinflationary boom, rising growth, falling inflation. That's kind of, it's going to get a bit confusing. When we talk about inflation here, we're talking about the rate of change of inflation. This is where we were up until about March, and you'll see it in a sec. And then the rate of change of inflation is slowing down, and so that's or going up. So that gives you the inflationary boom, which is summer. Now it's not inflationary. There's no inflation coming back. It's not the 1970s again. All that fucking nonsense. It is just Goldilocks. And then fall is when the rate of change of growth slows down somewhat. That's still Goldilocks, but that's when the amber light is on. So if you look over here, here's the percentage of countries. We look at the whole world here to figure out this whole thing. There's a lot of complex computation behind all of this, but we've done it all for you guys, all including the membership. So 53% of all countries in the world are now that we monitor are in macro summer, 25% in spring. That's falling as people transition to summer. Those in winter, very small, 12.5%. And then in fall, it's very few. So it shows you we have the full footprint of spring. You can see it in other ways. So the US, here we go, summer. So this is when the banana zone happens. This is when we're usually in the election cycle as well when this happens. And yes, it doesn't mean the market's going a straight line, but you tend to do pretty well. If I look at, the NASDAQ this year, it's up 13%. It's corrected somewhat, was up about 18%. And, by the end of the year, it's probably up 30 odd percent. That's kind of a very typical signature of summer. Crypto goes wild later in summer. So summer is the signature that is really interesting as things get interesting. The Euro area, also in summer. China is in summer, but it has elements of fall, i.e. it is not, the growth is a little bit too slow, which we know. They've been kind of flirting kind of recessionary conditions, and that the Chinese need to do something about, which is what the stimulus is coming. And we're already seeing Chinese stimulus.
Pal underscores the importance of liquidity in driving market trends. As financial conditions ease, he expects liquidity to increase, fueling further market growth. He points out that the weakening dollar and falling interest rates will contribute to this liquidity boost. Additionally, global factors such as Chinese stimulus and Japanese currency interventions are likely to inject further liquidity into the markets. Pal advises focusing on equities and commodities during spring and summer phases, while avoiding bonds and cash. He emphasizes the potential for significant gains in the crypto market, particularly for those holding assets through the cyclical ups and downs. Pal encourages investors to maintain a long-term perspective, avoiding the temptation to react to short-term market fluctuations.
The one everyone cares about is liquidity. So financial conditions lead liquidity. This is 2 weeks out of date because these things don't move a lot. But as the dollar starts weakening and as interest rates start falling somewhat, this is bond yields, not Fed funds, we expect financial conditions to continue to ease. Think of this as a consolidation, boring zone sideways pattern. What we should see is the next leg higher in financial conditions, and that means liquidity should follow. It almost always does. Our leads are all pointing to liquidity having to go high. If you remember, liquidity is all about refinancing the debts. We've got about 10 trillion to refinance over the next year. They're going to have to put liquidity in. They're going to have to cut rates, get bond yields down. It's all going to have to happen. Now, and this is a globalized basis. This doesn't include the global injection of liquidity that is coming from China right now. They're starting to pick up. It's also not taking into account the intervention done by Japan in the currency markets, which is also liquidity. Now, when we talked about Tesla, I said, well, the ISM, the business cycle, that's what we need to ignite this. So we can see the ISM is still kind of fucking around the 50 level. The 50 level is like, it's not really growing. Growth is like 1.5%, 2%. But once it starts going above 50, the rate of change of growth is going up. And that's when you're likely to see all of the cyclicals rallying. We're already starting to see this. This is when Mag 7 have led. It might correct a little bit, but what you'll find is the other stocks, the cyclical stocks, start to play catch up, and we have less dispersion amongst that. Everyone's like, oh my God, the market's going to fall apart because only a few stocks are going up. It always does that. When the economy picks up, those stocks are all driven by liquidity. These stocks are all driven by the economy. It's the economy stupid will pick up the rest of these stocks, and those gaps will narrow. So new orders minus inventories says that S&P, that the ISM will go higher, the business cycle. Our 5-month lead indicator suggests higher. Financial conditions suggest higher. So the business cycle is going to pick up. The Fed are going to be cutting. Interest rates are likely going to be falling. The dollar's likely to be falling. And we will be in that beautiful summer period, as well as the Europeans cutting rates and the UK cutting rates and the Canadians cutting rates and liquidity injections across the board. I can't wait. So that's where all of that is. In terms of asset allocation, again, this is all in the tool. I won't go through this in great detail, but in absolute terms, spring and summer is equities. Commodities, summer. So if you're a commodity trader, now's the time. You don't want to touch bonds, you don't want to touch cash. And crypto, yeah, baby, you're into that. Everyone's far too focused in the minutiae. And what you're missing, you're focused on these little things, but these things are part of that thing. Focus on that thing, not this thing. Even if you've got a lot of your net worth in the trade, we've gone through in detail, as have millions of people on the platform, explained that the business cycle is the driver of asset prices. We are just picking up in the business cycle. We're early stage, so therefore this is not the time to worry about selling out of your assets. Oh my God, are we peaking? Sure, can you have an air pocket? Can you have a correction? Absolutely. But this is not the time. I urge you to watch the business cycle courses, to read the macro investing tool, watch Julian Bittle's video. They will calm you down. They will get your sensory system just calmer. And I think you'll become a better investor once you feel like you've got a framework and you're not listening to, well, he said that, and he said that, and he said that, and she said that. Don't do that. Understand the framework you want to operate in, the time horizon you want to operate, and just stick with it.
Pal discusses the business cycle's impact on specific stocks, using Tesla as a prime example. He explains that Tesla's performance is influenced by both technological advancements and economic conditions. As the business cycle picks up, he expects Tesla to benefit from increased consumer spending and technological innovation, making it a strong long-term investment. Pal advises against trying to time the market. Instead, he recommends maintaining a diversified portfolio and considering protective measures such as buying puts to hedge against potential downturns. By focusing on the broader business cycle and staying informed, investors can navigate market volatility with greater confidence. Please like and subscribe my channel.